Hello, good evening. It is the evening of Tuesday, the 7th of January. I'm having a little bit of a nasty shakeout today in stock indexes after a little bit of a strong bounce yesterday. It's a little bit confusing. We are still in that first week of the year, kind of calming down. And when we look at seasonal patterns, for the first year of a kind of new election cycle, this is very normal, not just for the first week, but quite often for January. It can be a little bit of a choppy, funky start. If we take a look, though, and this is the Almanac Trader did a really cool blog post about this. When we have a down January, and he's listed all the years that we have had for kind of the last 75 years, when we have had a down January, it doesn't mean that we're going to have a down year. We can see that clearly there have been some bear markets. 2008 ended up as a down year, so did the 2000.com crash. But really before that, the only bad year was back in 1969. In January of 2024, we had a red January to start, and we ended up the year 23.3%. So just because we're having a little bit of a shaky start, even though everybody is feeling really great about stock indexes, no worries, right? I have some concerns, I have to say, but for now, there isn't really any need to panic. If we look at seasonality for where we are, we're in the post-election year. This is our election year. You can see most Januaries are a little bit of a rocky, rough start. Only kind of the pre-election year, the third year of the cycle, is the one where we tend to seasonally see a really bullish start. And this is on the Dow Jones because it goes back further. So we've got 120 years of data based on this. And we are here basically in a little bit of a choppy start. We may have a little bit of a choppy first quarter. Does that mean that necessarily that Bitcoin and crypto are going to go down with it? I honestly don't know. I do still believe that crypto is more tied to liquidity cycles than it is to Bitcoin halving. And I think if we see, everybody wants the dollar weaker. I think if we see that and we see a boost to liquidity, that it still will be really good for crypto. This is still a really positive kind of administration for crypto, but we still have to get through this bumpy start. So I'm not bearish just because we're having a little bit of toppiness on the 7th of January for the whole of the rest of the year. If we, this is what I mean about the sweet spot. This is another one with the Dow Jones, the S&P and the NASDAQ. You can see basically this is how the NASDAQ has been. It does tend to outperform, but here we are in the post-election cycle, and we're really in that kind of bumpy first quarter spot. So this is why I say be careful, wait for really good setups. I think this is very tradable, but we need to wait for really good entries and not kind of pile everything on out the gate. So there was some kind of bearish news yesterday. Interesting, it didn't tag the market. So this is the strongest warning I've ever heard of Fed Governor say. So Fed Governor Lisa Cook yesterday said that valuations are elevated in a number of asset classes, including equity and corporate debt markets, where estimated risk premia are near the bottom of their historic distribution, suggesting that markets may be priced to perfection and therefore susceptible to large declines, which could result from bad economic news or a change in investor sentiment. That is really strong language when you think that they said here, this is much stronger language than used in the Fed's Financial Stability Review from November, where they said that valuations continue to rise in equity markets from already high levels and remain stretched in corporate debt markets. So this is much stronger warning. But interestingly, yesterday market kind of held up. Maybe they weren't looking at today. There was some pretty interesting price action today, particularly in Nvidia, which was really kind of one of the strongest stocks. We saw a really nice move, but it now looks like a three-wave move, and we've double topped that. Usually in Nvidia, if we lose this daily 50 moving average, which has been really strong support and resistance for Nvidia, then we come back to the bottom of this sideways range. if you're a moving average trader, which I am, the most important thing to note that is that when your moving averages are flat, as we see here in Nvidia on the daily, it means you're in a sideways range. There really isn't the trend that you're looking for. When we are in a strong trend, as we were in Nvidia, pulling back to these daily moving averages are really kind of long entry points. But when the moving averages flatten out, it really does strongly point to a sideways range. And these moving averages, sure, they can be support and resistance within that sideways range, but there's no trend. You're sideways chop, which means we really hadn't broken out. What we really wanted to see was a breakout to new highs and sustain it, which would have pulled these moving averages apart and started another swing higher, a bit like we saw here. So sideways consolidation, and if we look at a lot of markets, that's what we're seeing in the S&P. If we go down to the daily, you can see really we're in sideways consolidation. This is what we've been doing since middle of December. We haven't broken out of this range. I was pretty excited yesterday, but we could draw it as a triangle or as a wedge, or we could, and we haven't broken out from this nasty consolidation. We are still sideways, and there are some people that will argue that this potentially is setting up a bigger head and shoulders pattern here if we break this neckline. I'm not going to do that. I will say that this is pretty important support though for the S&P. If we go from the August 5th low, which is when the Fed pivoted and we saw most markets make a bottom, you can see that the neckline of this potential head and shoulders pattern, or this support that we've been holding since December, is a 236 fib retrace from this 5,120 low here. And so for me, this is pretty important support. If we close underneath 5,909, the next stop lower is down here 5,785, and this swing low from the 1st of November, which would take us back to the election start point. Now, there is quite a lot of data this week. Most of it's to do with jobs, and I think that we've also got the Fed minutes tomorrow, and we've got a lot of Fed speakers this week. I think, though, that much more important than these jobs and what the Fed doing is going to be what Trump does when he gets into office. I hear lots of stories about they're going to push through most of their kind of most important legislation in the first 100 days to try and get it through and out of the way. I really hope, with some of the things that they're planning, I really hope that we get a weaker dollar, or I think that it might be quite disruptive, and potentially the market is starting to think that too. But in a strong market like this, it's a trader's market. These pullbacks will be opportunities, and these breakdowns will be opportunities too. So it's just a matter of trading it and timing it right and not rushing in. The same consolidation that we are seeing in these markets, and potentially a little bit toppy, we are seeing, this is gold weekly chart. Really, you can see that this rally that we were seeing in gold's really kind of stopped dead with the Trump election the beginning of November, and we've really been in sideways consolidation since then. If we put this in on the daily, here we are, the same dead flat moving averages on the daily. Haven't been able to get above the daily 50 back to the top of this range. We're still trading sideways in this one. I would argue that this potentially is also a little bit of a three-wave rally, and we still potentially are owed another bigger leg lower in correction and back to the daily 200 moving average in gold as well. So, whilst I know I say this a lot, but just don't diddle in the middle. And in the middle of this really nasty consolidation with no trend and flat daily moving averages is really kind of dangerous unless you have a much bigger view. If we look at this on the weekly, you can see that our support is really this weekly 20 moving average, and every rally that we have made, if we measure from the high that we made in October to this low, every rally that we have made has been unable to close above this 50% retrace of that move. Let's take everything else off and you can see what I mean. here. So from this high to the low, we went up, we went down, and here now this level through the middle, which is 2,663, this 50% level. Every time we try and get above it, we get knocked back, and that is our weekly highs. And if you look at it on the daily, this is the high. I think a trigger for me would be closing and holding above 2,663, might take us back to these double top highs, and potentially, if this was a first swing higher and a three-wave correction, we would be looking to retest the highs and continuing higher. But for now, 2,663 is really kind of the pivot level in the middle. It's worked a bit like that $100,000 level has in the middle for Bitcoin. And as we did yesterday, that was also where the daily 50 moving average is. Unfortunately, just like Nvidia, it was a little bit of a false breakout. And today we're back underneath that 100,000 level. And we are back underneath this daily 50 moving average. This is a really nasty move that's taken out kind of 5 days of upward price in Bitcoin. And this also, I'm afraid, for me, kind of points to this correction not being over, and back to the bottom of this sideways range, potentially here on the weekly, if we look at it, potentially another bigger kind of ABC correction that we are in. So, this is a really tricky week. There's lots of jobs data, there's lots of data, and we've kind of got a bit of a bumpy ride really until Trump gets in and we see what he's going to do. And it really is a good time to trade carefully, because there's nothing worse psychologically than kind of starting the year with nasty losses. It doesn't put you in a great frame of mind for opportunities that are going to come, and they are going to come. So that's what I'm looking at. Whenever Bitcoin catches a bit of a cold, unfortunately, quite a lot of other markets like meme coins have a really nasty shakeout. I do think that there are some opportunities coming in those. I'm going to look at them separately. But this is a week really, honestly, to play defense and stalk the stuff that you want to trade.